quick update on what the technicals were telling us on February 5th and what happened. Hi, Jim Gore from THOR Wealth Management. Well, on market update on February 5th, we talked about some technicals that we were looking at. And I want to give you a quick update because some things have changed since then. If you look at this chart, one of the things we talked about was looking at the S&P 500, the SPY. And we were seeing some bad signals here. You could see that the price was going up, and that's the first arrow on the top there. And the price was going up while you looked at the MACD was going down and CMF was flat. CMF is money flows going in there. And as we said back in that video, if you're not having money go in to the market, it's going to be very hard for the market to continue higher. Well, look at actually what has happened since February 5th. I did another arrow on each one. Now we're seeing the price of the S&P 500 is now going down. So the divergence signal was accurate. It was saying be careful about the S&P 500. And you can see that the MACD has actually gone down and it's a lower low, which is not a good sign for the stock market having a recovery. Now, there is one thing that is positive in this chart, and that is CMF has actually picked up a little bit. Till the last couple of days, it's dipped down. We're watching that very closely, but now things are making more sense. The price is actually following what the technical indicators were saying, and the question is, for a lot of people, will this continue? Is this going to be just a run-of-the-mill 5% drop with the Iran war, or is this something that's going to continue for some time? Well, one of the things that we look at is the percentage of stocks, or how many stocks in the S&P 500 above their 200-day moving average. In other words, are they up for the last year? And you can see that as this is the daily chart. You can see it's dropped off pretty dramatically. It's at the lowest level in the last 6 months. So 257 stocks out of the 500 are now positive over the last year. So we're almost at an inflection point. And what you have to look at is that 250 stocks. If it goes down further than there, it could be something that is a little bit more dramatic. And what I like to look at is a longer time period than the daily chart. Let's look at the monthly chart going back for the last 25 years. And when you see the candle, a solid candle go down, and it usually does continue. You saw that in 2002. You saw that in 2008. Notice that in 2008, that wick actually dropped in 2007 and then went back above it to 250, and then it fell again back at the end of 2007. So it was saying be very careful because most stocks were down, then were up going into the market decline. But you'll see some candle wicks. If it goes down during the month and it comes up and it still stays above 250, that's not a bad sign. It's a bad sign if it goes down and we have a solid candlestick going down. So we're watching that very closely because that will be an indicator. Is this just a run-of-the-mill market correction, or is this something that's going to be a little bit more sustained? And if it does go down below 250 at the end of the month, that could be a sign to watch out for things to come. And we're going to look for some maybe positive divergence signals before we get maybe a little bit more positive on the S&P 500. One of the charts I do want to show, and this is the monthly chart, or the chart of the week, if you will, for the technicals, is looking at the US dollar. And you can sit here and look at this chart, and I drew a line right at 100. And this is looking at the US dollar and going back to 2013. And you can see here 100 it was some resistance back from 215 to 2022. It broke above that. And then it broke above it. That resistance now becomes support. And you can actually see from 2023 all the way to 2025, it went down to 100 several times and stayed above it. Now it broke below that. And we're right now at 99. It is big resistance here at 100. And what our indicators are saying is that we had a 13-year run for US dollar being strong. It's probably going to stay below 100 because that has some major resistance There was some hype that it went up one day above 100 and literally it came down to under 100 the next day. You have to look at this, just not the, wicks, it's a total body. The body has to be above it on a weekly basis, and it's not there yet. If you have any questions or concerns or need help with your portfolio, please email us or give us a call. Take care and talk to you in a couple weeks.
Subscribe to the THOR channel today.